Good afternoon. This is Ron Brown. I'm recording this on November 25th, which is the Saturday following Thanksgiving, and I'm going to continue with my series on VPA and Wyckoff tools and HGSI. Now, this is going to be somewhat of a market report too. There's so many market reports out there that often just lead to confusion, so I'm going to concentrate on the use of volume price analysis with HGSI. So let's go ahead and get started. Standard risk disclaimer: any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Now this is a 3-chart layout that I have set up for this video. This is a monthly chart, a weekly chart, and the daily chart. And the daily chart is the 2B context chart. It has a 3, 6, and 18. I wanted to have some more screen space, so I'm not using the chart with the other crossovers in it because this is sufficient. This covers all of the indicators. Now what I have down here is my major markets plus folder, which you can find. I need to get in the right spot in the designer, and forget about these two groups. Those are just a couple that I put in for myself. You'll find it under user groups and market analysis user groups, and the first folder, major markets plus. Just click through to the warehouse, and then they'll be right here. So this is the way the markets closed on Friday. Now, the reason I'm using this warehouse view here and this chart, or these 3 charts I should say, is I want to show you the trigger points using HGSI and VPA, and the way I've got my layout here. Now, not all of these indexes have volume. If you look down this column, you'll see that several of these do not have volume. I'll go ahead and make this full screen, and there are several that are blank in here. And that's one of the reasons why I use the 3-8 crossover triggers also, in addition to the indicators, the VPA indicators and the Wyckoff indicators, which are these 3 columns right here. And let me point out to you that, what do I have up here? That's Bitcoin because it's on top. I'm going to pass by Bitcoin, and I'm going to go to the SPY. Now, using the warehouse information that I pointed out in the one of the prior videos, is that there's all the information that I need right through here. The SPY shows that the volume on Friday was low. You can see it's very low, and that's to be expected on a holiday or a Friday with shortened trading hours. It's going to be very low, and the spread is narrow and the close is high, and you can see this right here. I'll make this full screen and I'll zoom in on it. So the spread is very narrow. The volume is light or below average. Here's the moving day moving average line, and the close is high. So just by looking at this warehouse view, I have a pretty good idea of what's going on. And then as I work my way across here, I can see that the 3 crossed the 6 17 days ago. The volume point of control crossed 18 days ago. So this is why I'm using this particular chart, just to simplify this a little bit. So I'm going to bring up an arrow here, and okay, there's my arrow. And I'm going to point out that 17 days ago, which would be right here, that's where the 3 crossed the 6, and there was an effort to rise candle generated that day. Now notice there were no blue bars on here because even though this volume was above average, it is not higher than volume on down days, either in a 5 or 10 day window. That's why it didn't appear here. But we have other signals that tell us that this market is moving, or the SPY was moving. What do we have here? First of all, we have that crossover. We have a volume point of control the prior day, which says on this day that the bulls were gaining control. And then if we look at the volume bars on these days, they're above average, but not enough above average to generate what I call volume pocket pivots. These come later in the run. But if you're scanning and using these other indicators, you're going to find not only indexes but stocks that are crossing over. Now I'm going to sort on this. I have to go over here and re-engage my mouse and sort on this. And by doing that, I can look down this column. This is the days since the 3 crossed the 6. Now this is going to show me all of the indexes that fired on that day, whether they had volume or not. When there's a blank here in these windows under the VPA volume, that means that these indexes did not or do not have volume. And even though they don't have volume, you're going to get buy signals based upon the 3 crossing the 6. And this day right here, 17 days ago, on the 3 crossing the 6, which included all of these indexes here, beginning with the diamonds and Dow Jones, NASDAQ 100, NASDAQ Composite, and so on. Here was a buy signal with even on the indexes that didn't have volume. But let's look. Let's go back here. Let's use the QQQ this time. And I'm just going to double click on it, and it's going to populate these 3 charts. And this is as of the close at noon Central Time on Friday. The volume was low, the spread's narrow, and the close is mid. And you can see that up here by looking at this. But what I want to point out here is that these buy signals, or the crossovers, it occurred on this day right here as the index was coming off of the bottom. There's an effort to rise. Also, high volume up bar closing in the high indicates strength. So these VPA flags are showing up. But even if the VPA signals were not showing, if you learn to read a VPA or VSA, whatever you want to call it, you could tell immediately. If I turn these off, you could tell immediately, even without the VPA indicators built into HGSI, that this market is on the move. Why? How do I know? Well, if I look down this column and everything would have had a 0 on it that day, even without these indicators, that tells me that the market's on the move. VPA does not necessarily have to have a signal, because every candle should be read individually. Now looking back at this area right here, you can see that the bulls were starting to regain control from the bears. Now on these prior 3 days, big down bars, volume, excessive volume on the negative volume pocket pivots or reverse volume pocket pivots. And we didn't see any of the blue bars until this point right here. Why is that? Because these indicators are set up so the volume bar has to be greater than any volume, any negative volume pocket pivots which appeared over the previous 5 or 10 days. That's why we didn't see anything here. But on the other hand, this volume is above average. When I click on this right here, you can see that this goes back to 11.1. The volume was above average. The spread's above average. Close is very high. Sentiment's bullish. So we can I'm sorry, I had my candle. I mean my arrow on the wrong place. This is the bar right here, which is giving these signals off. Now I'm going to go back here and just click on this bar right here. Put the crosshair on it. This is where the volume point of control went from negative to positive. And what's the reading here? Volume was above average, spreads below average, the close is mid. But this is your early buy signal here. The 3 has not come up through the 6. It won't do it for a couple of days. But if you use this column here, you can see 19 days ago, this is when this occurred. And then what does it say the next day? Volume was less than average. You can see that it's slightly below the 90 period moving average. So it's below average, but the close is very high, and we already have our volume price analysis signal in place. And then we get a confirmation with the 3 crossing the 6 with an effort to rise. And this is where this information is pertinent. And it keeps moving up. And finally, here at this point, we get what's called a volume pocket pivot based upon the filters I created. It means that this volume is higher either over a 5 or 10 day period than any down volume based upon a down bar and the volume accompanied with it. This is slightly higher. Plus, we have an effort to rise, and the market continues to go higher. But where do you want to get in on these? You want to get in down here, and it's a matter of reading the information on the crossovers, the volume point of control, or the VPA flags. Now, like I said, the VPA flags are not always going to generate a signal because these signals are built upon, obviously, on very specific criteria. Now I'm just going to look at a couple more of these. Let's look at the S&P 1500. And just looking across here, this fired the same day. The index does not have volume. You can see this is blank here. So this days since the VPOC crossed, it means nothing without the volume. And you can see that this is empty over here as far as volume and the volume point of control. But still, we're going to get a signal based upon the 3 crossing the 6. So this shows you why I put so much emphasis on the 3 crossing the 6, because we can even get signals without volume. And if all the other all the other indexes are generating heavy volume and crossing up through the 3 crossing the 6 at the same time, that's a pretty good indicator that the markets, or the market, I'll say markets plural, are on the move, or the indexes are on the move. Now the indexes have had quite a run. We're going into December soon. Don't know if this can continue, but let's just take a look right now at the NASDAQ Composite, because it has volume. I'll bring it up, and you can see that the 3 is well above the 6, above the 18, but we're losing some momentum here. Let me get that arrow going again. You can see we're losing some momentum to the downside, and the reason that this is doing this is because the 3 and the 6 are getting closer together. When they're spreading further apart, moving rapidly, you're going to get the high histogram here. It continued here, but now, like I said, they're starting to come together. So is this a pause, or is this going to be a pullback for a while? Let's put a crosshair on here. Have to bring this back. Alternate C, okay. And you can see that this high has surpassed anything in recent months. So it's really in an area where We don't know, but there is some momentum loss, so you just have to be careful. But there could be some rotation into other groups. Now let's put that crosshair on the weekly chart, and we are up against resistance on the weekly chart. And on the monthly chart, see it right here, there is the same resistance here that I'm looking at here. So you have to be careful. We have come a long way in a short period of time, but the trends are up. I'm going to put this on the last bar. You can see the best fit trend. Long is up, medium's up, short's up. The random walk trends, I need to keep this over here, they're all up too. But we have to assume we're going to have some sort of pullback before this market can go higher. I'm not predicting that. It's only logical. I'm going to do one more thing before I end this video. I'm going to bring the designer up, and I'm going to go into my major market analysis, and I'm going to go to the broad market indices, and I'm going to click through to the warehouse. I'll close this, and what I wanted to do here is just to confirm that these indexes were signaling about the same time. I believe the Dow Industrials were 16 days. This says 17, so it crossed over right here based upon my market cap weighting. You can see the crossover there. The VPA crossed over the same day. So this is just a way to confirm what you see in the standard indexes. These are my broad market indices, which are calculated according to market cap weighting. Now, if you don't know how to do that, just go up under Preferences, Global Index Options, and select, get the arrow up here, Market Value Weighted, relative start date of Friday this week, but use 104 weeks rather than 52. I like to see a longer chart. Use the default internal filter. It indexes stocks greater than $5 and have don't deferred index build, or check this so it doesn't do anything. That's something we don't use anymore. I'm going to cancel that. I have to go over here and get rid of that. So that's how these indexes are built. So the Dow Industrials in the top 100 stocks in all of the major indexes, that crossed over 18 days ago also. And then the broad market indices crossed over, and you can see how well this worked. Now, all securities lagged the industries themselves. Let's bring up the industries. Well, here's what happened. This is all of the 175 industries. It actually was generated on that day, and then there was a pullback because some of the indexes pulled back. The volume point of control turned negative, and the 3 went down through the 6 for one day, and then there was a fresh signal on the indexes. But I try to use the major indexes. All the other ones are in here, though, so you can just see where they stand. So this is a good way to confirm what the major indexes are telling you just by coming into my broad market indices. This is loaded with the stocks, the institutional stocks. So looks like this is a crossover day right here. You can see 3 days of above average volume. The VPOC crossed over clear back here, and then there's an effort to rise, another effort to rise, and so on. But the early buy is the VPOC on heavier volume, and then a crossover here confirms what we were seeing in the major markets themselves. You can see this is the highest number was 16 days. The broader markets, 2 of them were 17 days. So everything was moving up. on heavy volume or heavier volume, that's what you look for. That tells us the institutions are jumping into stocks. It may not always work out, but it works out more often than not when you combine both price and volume, hence VPA, volume price analysis. Thank you for listening. Have a good weekend.